Good morning, ladies and gentlemen. It's a very warm welcome to you on this lovely Friday morning when the markets are in a nice buoyant mode. We continue to discuss sterling performances in the fourth quarter, and in that connection, we are joined by the management of Gulf Oil Lubricants. The CFO, Mr. Manish Gangwal, joins us to discuss what has been a record quarter for Gulf Oil Lubricants in terms of highest ever volume clocked of 39,500 kiloliters, as also a very strong show in both the top line as well as bottom line. Let me just go through the numbers. Sales for the fourth quarter rose about 7% to 915 crores. It was also a rise over the third quarter when the number stood at 905 crores. Net profit was up 7% at 92 crore rupees compared with 85 crore rupees a year ago. A very good morning to you, Mr. Gangwal, and a very warm welcome to you, sir. Would you care to explain how this rise in profit and top line came about against the backdrop of muted crude oil prices, which are your raw material source?
Good morning, Mr. Bhatnagar. Thank you for having me on your channel. I guess you are right. This quarter was one of the robust quarters for us. We recorded all-time high volumes, all-time high revenue and EBITDA. And of course, for the full year also, we had a record 3,500 crore plus top line for the first time, 470 crore rupees of EBITDA and 362 crore of PAT, which are again highest ever. And the PAT growth is in fact 17.5%. So overall, a very good year, very good quarter for us. And we have been able to, during the quarter manage our gross margins well, because as you will recollect, during the quarter 4, Jan to March, the rupee was depreciating and we import a lot of our raw materials. So rupee was under pressure, but in spite of that, we have been able to sequentially not only manage our gross margins, but slightly improve it. So overall, it was a decent quarter, and full year wise, it was a very, very good year for us. We generated record cash, and we are happy to share that board of directors also increased the dividend payouts, and the final dividend is 28 rupees, which translate with interim dividend of 20 rupees to 48 rupees per share dividend during the year, for the year.
Right. The OPM, ladies and gentlemen, the operating profit margin for the quarter gone by stood at 14% compared with 13% in the same quarter a year ago. So 100 basis point improvement. Let's look at some other numbers that Gulf Oil Lubricants has shared. Just a background, the company makes engine oils, greases, driveline fluids, transmission oils, gear oils, and many other such lubricants for cars, two-wheelers, and of course commercial vehicles. Let's get into some more details. Mr. Gangwal, what are you looking at in terms of volume growth in the coming quarters for both compared with the industry rate, and of course anything that you can talk about where you are still under penetrated as far as distribution and supply chain is concerned? What is the volume growth rate that you're looking at?
So as a trend and as our track record, we have been delivering 2 to 3x the market growth rate in terms of volume for the last 10-15 years. And that nearly translates into 9 to 10% CAGR volume growth for us. Industry grows at 3 to 4% in terms of overall volume for lubricants in India, which is one of the highest in the world. And we have a track record of growing 2 to 3x of that. So we want to continue to maintain our 2x to 3x volume growth trajectory, which should be anywhere in the range of 8 to 10% even in the coming years. And on the top line, it's a function of course, prices, and we have been focusing a lot on premiumization of our products and launching high grade products in the Indian market also. Our brand is also in the top 3 brands in India. So all in all, we look at clearly a 2 to 3x market growth rate.
Right. Mr. Gangwal, would you want to comment on the expansion that you're doing at your Silvassa plant. I believe there was a capacity constraint there. What is the expansion plan for FY26, which is the current year, and what was the capacity utilization in Q4?
So we have two plants. One is in Silvassa and one is in Chennai. Now both the plants are running near 100% capacity on two shift basis, and we have actually acquired some land adjoining our Silvassa plant. We are looking for some expansion there. The board has to take a final call in the coming quarters, and once we get that go ahead, then we will start the work there. But on third shift basis, we have still a lot of capacity on blending side. So we do not have any constraint as of now, but in order to be future ready, we want to put some money on the expansion of the Silvassa plant.
Okay. Mr. Gangwal, what would be the guidance as far as OPM is concerned? The reason why I ask is that crude oil prices are at 4-year lows, and generally we see that base oil also follows similar trajectory after a couple of weeks, a couple of months. How do you see your OPMs in the coming quarter against the backdrop of weak crude oil prices?
So you are right. I think crude is tracking at currently around $65 per barrel, which is a good trend to have. It has to sustain at these levels because we all know that crude is a very volatile commodity and depends on a lot of global scenarios. And base oil, which is a derivative of crude, which is our raw material, also tracks crude over a longer period of time. But in the short term, the demand supply of base oil plays its own role. But we believe that if the crude remains in the range of around $60 to $65 over the coming quarters, that should positively impact base oil at some point in time with a time lag. And of course, the margins we guide are 12 to 14% EBITDA margin levels. We are already towards the higher band of this margin, towards the higher end of this margin band, and we want to not only continue that with premiumization efforts, with the support of input cost. Obviously, we want to move to the higher trajectory, but at the same time, it is a function of market pricing, and we are investing continuously in our brand. As we speak, a mega campaign is going on for our motorcycle oil with our brand ambassador, Mr. Dhoni, and this is one of the biggest campaign Gulf has had ever. So we are investing back in brand as well.
Right. Mr. Gangwal, you also have an electric vehicle charges subsidiary by the name Tirex. Now, what is the position there? What is the revenue growth that you are seeing in Tirex, and any plans in terms of expansion that you can share over the next 2-3 years?
So we have made our foray into EV charging by acquisition of 51% stake in this Tirex Transmission, which is a Indian company which is into DC fast chargers manufacturing, and they have now started making AC chargers also in their facility. Their turnover has grown to nearly 79 crore in this year, which is 300% growth over last year. So it's a fast growing industry. As we all know, EV chargers will be required to be installed across areas and across highways, residential buildings, shopping malls, etc. So it's a very fast growing industry, and our aim is to continue to support them, nurture them and grow them. And with that, we want to take this company to a top line of around 400 to 500 crore in 4 years time. That's our ambition with this business, and we keep evaluating this sector very closely.
Okay. Mr. Gangwal, let's pay attention to the net debt levels. You are net debt positive, cash to the tune of about 1,000 crores and total debt of 333 crores. This expansion that you are doing at Silvassa, will it require additional debt to be raised, or is it all internal accruals?
So we have sufficient cash on our balance sheet, and we are a zero long-term debt company, and we will maintain that status. We will fund it from internal accruals.
Okay. In terms of any guidance on the top line and bottom line that you can share, given the kind of stagnation, if I might say, that we are seeing in the domestic car market as well as the commercial vehicles market?
So we are in roughly 7% market share company as of now on an overall basis. If we take automotive and industrial lubricants both put together, we have ample scope to continue to grow 2 to 3x the market is what our guidance always is, and internally also the theme is to continue to grow 2 to 3x because we have very geographically as well as product wise and expansion wise, we have a lot of scope for keep growing our distribution, keep growing our customer base, and gaining market share over the next many years to come. So we continue to aim 2 to 3x the market growth rate.
Mr. Gangwal, the exports volume for the fourth quarter grew about 7 to 8%. What is the situation of exports as a percentage of total sales? Do you see further up move in this business?
So we are exporting Gulf branded products, some of the also exporting with some of our OEM the products to globally many countries from India. We believe that our exports have grown very fast with the support of OEMs, but it will still be around 5 to 7% of our volumes overall.
Okay, and how about the target towards introducing liquid cooling products for data centers? What is the update now? You had mentioned that you would be developing 2 liquid cooling products. Any phase 1, phase 2 trials that have happened? Any feedback that you can share?
So yeah, I think data center cooling is being spoken about a lot, although the market of this in India is very, very nascent at this stage. But we are ready with 2 products, and with the help of our global technology team, which is based out of India in a large way from our Chennai plant. And we are now exploring a proof of concept trial with some of the data center liquid cooling service providers in India. And as soon as we have developments on that, we will obviously be highlighting that. But we are ready with the products.
Okay. Any plans to raise fresh funds via QIP, or are you comfortable with internal accruals and level of debt?
You see, as a company, we generate a lot of cash, and last year also we have generated 423 crore of cash from operations, and we do not have any plans as of now for any fundraising.
Okay. Gulf Oil Lubricants also had an explosives business. Would you want to comment on that part of the business growth?
No. So in this company, we do not have any explosive business. This company, lubricant company, was demerged in 2014 as a separate lubricant company out of the overall other companies.
Okay. With that, Mr. Gangwal, thank you so much for your time. We look forward to meeting you again on the coming quarters, and of course the very best of luck as far as the fresh capacity is concerned at Silvassa, and may the market share rise dramatically. Thank you so much for your time, sir.
Thank you.
That, ladies and gentlemen, was Mr. Manish Gangwal, CFO at Gulf Oil Lubricants, a company that's announced a record fourth quarter in terms of volume sales as well as top line and bottom line. Please continue watching Business Today television. There's a lot that's happening on the other side of the break. Thank you for watching.